There's a notion that if you remove the Fed chair for cause, which is what the US code provides for, that the Fed would lose independence. But it's just not true. They're still going to make independent decisions. And in fact, the new Fed chair has to get the other members of the FOMC to agree with him. And this Fed does need a new direction. It has a deeply flawed, dangerous policy framework. And this Fed chair is probably one of the worst we've had since World War II. The failure to halt the explosive growth of the money supply in late 2020 and early 21, which caused the great inflation of 21. And specifically, there was very hard data. It's extremely obvious they were headed towards double-digit inflation. And Powell ignored it. I'm not sure it was for political reasons or just pure incompetence. He doesn't believe the money supply matters, which is absolutely ridiculous and horrible. The president has tremendous power. He can make things happen. It can be overruled by the courts. There can be lawsuits, but can bring in federal marshals and remove the Fed chair. As if this happened, we'd lose 200 to 300 S&P points and 30 to 40 base points on the 10-year. Some of that's already being priced in. We're losing half of that, and it hasn't even happened yet. So maybe that's too conservative, but it just creates a buying opportunity. The Fed does need to cut rates. Chair Powell has been a disaster, doesn't understand how to deal with tariffs. Most of the Fed doesn't either, and it needs to be reformed. So the sooner the better. But if it were up to us, which it isn't, obviously, we would wait till the third quarter this year after the tax bill is completed, after we have some sort of trade clarity, at least more than we do now. So it's clearly a horrible time to do this.
But then when that day comes, if President Trump wins, what happens to bonds? Because there's a lot of focus right now on what's happening with the dollar, and bond yields continue to rise.
Well, definitely. So there is a loss of confidence in the US, and that's why it's not good timing to do this right now. And really, to us, it's more important to reform the Fed's policy than it is to have a new Fed chair. If they just pursue the same arbitrary 2% target with a deeply flawed and delayed index to track that, then the next Fed chair could make the same mistakes. But it's important for global confidence for the US to put that decision off. But the point being, yes, it will blow out in this panic. And then people realize, oh, well, now it's more likely they're going to cut rates. Well, if they cut rates, it's very powerful for the capital markets. It's like an injection of about $400 billion per year into the capital markets through the money supply. Because normally the money supply grows. Now it's shrinking by about 0.5% to 1%. So that's just an indicator of how tight the Fed is, how much they're holding back the economy. So, short-sighted move probably is appropriate to drop, say 6% on the S&P. But that's a huge buying opportunity because it's bullish that Fed's more likely to cut rates.
If you were a betting man, when do you think President Trump would move to fire Jay Powell? Within the next couple of weeks or within the next couple of quarters?
I'm hopeful that Scott Bessent, who did win over the Navarro camp, is now in charge. So I'm confident / hopeful that it'll be no earlier than the third quarter, and there'll be some sort of process developed by Bessent to replace the Fed chair, but not do it immediately. In the long run, nothing's changed about the US. Having probably what'll end up being reasonable tariffs is actually a good way to raise revenue, not the end of the world. But we're going to see that these tariffs are not as dramatic as people in terms of impacting our economy. And so the US investors will calm down. And eventually the rest of the world, not sure about China, they're probably selling our bonds, but the rest of the world's going to calm down.